Imagine Wall Street as a bodybuilder, flexing its financial muscles, pumped up and powerful, all thanks to the relentless energy of American consumer spending. For years, this economic powerhouse has thrived on the constant flow of dollars from shoppers across the country, each purchase adding a little more strength to the system. Every trip to the mall, every online order, every impulse buy, these are the fuel that kept the American economy running at full speed, making it the envy of the world. Every purchase, from that overpriced coffee you grab on your way to work, to the little luxuries that make daily life feel special, has played a part in this economic engine. Even those unnecessary sneakers, bought on a whim, have helped feed this never-ending cycle of spending and growth. But now, something has changed. The spending spree has paused, and Wall Street's once bulging muscles are starting to deflate, leaving the financial world looking a little less confident. Retail sales are declining, and the silence from cash registers is almost eerie. The usual buzz of commerce has faded, replaced by uncertainty and concern. The American economy, so dependent on the willingness of its people to spend, is now feeling the impact in every corner, from big cities to small towns. People are skipping extras like guacamole on their burritos, holding off on big purchases like cars, and thinking twice before swiping their cards. These small decisions add up, creating a ripple effect that spreads through the entire economy. It's like a stadium wave that suddenly stops mid-motion, leaving everyone confused and wondering what just happened and what comes next. On Wall Street, the question echoes, where did the wave go? Investors and analysts are left searching for answers as the usual patterns break down. The signs of change are everywhere. Shuttered stores, desperate sales, and empty shopping streets. And this time, the warnings are impossible to ignore. Retail sales figures, once a source of pride and optimism, now trigger nervous coughs in boardrooms and government offices alike. The numbers for August 2025 are in, and for the third month in a row they show a steady decline, raising alarms about what the future might hold. This isn't just a minor blip on the radar, it's a fundamental shift in how Americans think about spending, saving, and the economy itself, a change that could reshape the nation's financial future. For decades, the American consumer was Wall Street's golden goose, fueling the economy with a seemingly endless appetite for new gadgets, clothes, and experiences. Our spending habits kept businesses booming and stock prices soaring as we eagerly bought the latest and greatest, often without a second thought. Companies thrived on our impulsive upgrades and trendy purchases, counting on us to replace last year's phone or wardrobe with this year's must-haves. Retailers and tech giants built entire business models around our willingness to spend. But now, the golden goose is under the weather, shoppers are pulling back, and spending is tightening across the board. The once bustling stores are quieter, and some are even closing their doors for good. Credit card debt, which once soared to record highs, is now plateauing as more people focus on paying down balances and avoiding new debt. Americans are rethinking their relationship with credit. This is a positive shift for personal finances, helping families regain control. But for banks that rely on interest payments, it's a worrying trend that threatens their bottom line. The grocery aisle tells the story too. Shoppers are increasingly reaching for store brands and generic products, trading down from premium labels to save every possible dollar. Inflation has stretched household budgets thin, forcing families to scrutinize every purchase and change long-standing habits just to make ends meet. Prices for everyday essentials have climbed steadily, but wages haven't kept pace. This gap means that each paycheck buys less, and people are forced to make tough choices. It's the cruel joke of inflation. No matter how hard you work or how fast you run, it feels like you're stuck in place, unable to get ahead. This new reality has forced a dramatic change in consumer habits. People are planning purchases more carefully, using coupons, and even removing items from their carts to stay within budget. Shoppers are actively searching for ways to cut costs, comparing prices, and putting back expensive items at the register. Every dollar counts more than ever. The shift from premium to value products is a clear signal of consumer anxiety and caution as Americans adapt to a new era of financial uncertainty. Wall Street is in panic mode as consumer spending assumptions crumble. Headlines warn of market trouble as shoppers retreat. Stocks of consumer-reliant companies are plummeting. CEOs sound worried, using jargon to mask fears of declining sales. Companies are pulling back, delaying expansions, and considering layoffs. This cycle of fear and cutbacks could lead to job losses and more consumer caution. Americans are making tough choices, not becoming minimalist monks. Rising costs of necessities leave less for wants. High interest rates make loans and credit expensive. People are budgeting, deal hunting, and mastering the art of saying no. Impulse buys and spontaneous trips are on hold, shopping lists are followed, and price comparisons are the norm. This thoughtful consumerism is a survival skill for families. Economic anxiety is palpable, even among the financially stable. Precautionary saving is a rational response to uncertainty. People are shifting priorities, focusing on experiences over stuff. Affordable ways to live fulfilling lives are emerging. This cultural shift challenges old economic growth models. Spoiler, probably not. This is a transition, not a catastrophe. While it may seem daunting, it's important to understand that economic cycles are natural. They ebb and flow, and what we're experiencing now is a recalibration. It's a chance to correct excesses and build a more sustainable future. The economy is moving to a sustainable pace after stimulus-fueled spending. This slowdown is a necessary adjustment, allowing businesses to recalibrate and consumers to rethink their spending habits. It's a period of reflection and realignment. Wall Street must adapt, offering real value and competitive prices. Investors and companies alike need to focus on long-term growth rather than short-term gains. This shift will foster a healthier economic environment. A slowdown can help control inflation, benefiting everyone. By curbing excessive spending and borrowing, we can stabilize prices and ensure that the cost of living remains manageable for all. Economies need to slow down to avoid collapse. Just like a car needs to decelerate to navigate a sharp turn safely, our economy needs to slow down to prevent overheating and potential crashes. Conscious consumption is a blessing, fostering financial security. By prioritizing needs over wants, individuals can build savings and create a buffer against future uncertainties. People are learning to differentiate wants from needs. This newfound awareness is leading to more thoughtful spending, which in turn supports a more balanced and resilient economy. This adjustment builds a stronger foundation for the future. By addressing current challenges head-on, we can create a more robust and adaptable economic system that can withstand future shocks. The story isn't over. Consumers are smarter and more deliberate. With access to more information and tools, people are making better financial decisions, which will drive positive change in the market. Wall Street will adapt, finding new ways to invest. Innovation and resilience will be key as the financial sector navigates this new landscape, ensuring continued growth and prosperity. This is a wake-up call. Consumers are still in charge, the power dynamics are shifting, and businesses must listen to their customers' needs and preferences to stay relevant. A smarter consumer and responsive market benefit everyone. Together, we can create a more equitable and sustainable economic future.